Good afternoon. It's me. This is the eighth wonder of the world. Welcome, global stock investors. Today, pretty much, I'm going to go over my 79 assets that I have under management. Pretty much, it's in an app called Tradebase. But before I go into that, I'm going to show you my Robinhood portfolio. So I'm going to go into Robinhood right quick. Just briefly go over it, and then pretty much I use Tradebase to pretty much organize pretty much my 79 stocks. So a lot of people, they're writing and they're leaving comments where they're saying like it's impossible, but pretty much I've been learning. I've been taking other YouTubers that I've been watching. I've been taking the good from other YouTubers and pretty much applying it to my strategy on how I'm gonna invest, and that Tradebase is flawless right now. I mean, it's pretty much making my life so much easier. But before I get into Tradebase, let me look at I don't look at, well, this is a new feature. I don't know if you guys know this, but that live, this is new. So I guess this is what it's going, like, it's 2:37, right? 2:38. So the market closed here, and I'm in California at 3 o'clock. So it's got like 22 more minutes. But since I'm not a day trader, swing trader, I don't look at the 1 day. I don't look at the 1 week. I'm not concerned about the 1 month. I'm not concerned about the three months. I'm not concerned about the 1 year. I pretty much look at the all. That's pretty much kind of equivalent, because me being a college student, pretty much this is my GPA, my cumulative GPA, not for the semester, but from when I first started till now. Something that I learned recently that kind of blew my mind, because I was trying to get financial aid, and pretty much I'm going back to school to pretty much get better at academics and pretty much understand the world better through education. And I'm a film student, so basically the skills that I learn, I go to the Academy of Art University in San Francisco. So pretty much all those skills that I'm learning now, I'm gonna apply it to my YouTube channel, but I'm still in the beginning stages. So pretty much from my knowledge from there, I'm gonna apply it to my channel. But pretty much I'm doing these uploads, and because I'm doing two things at once, I'm pretty much a film student by day, and then stock market investor pretty much all day. So I was gonna say at night, but pretty much the stock market closes for me, California closes at 3, and it's only open from Monday through Friday. And then but speaking of investing 24/7, pretty much, as you can see, this crypto, those two right there, they never shut off. So I'll get into that in another episode, but pretty much that's how I kind of look at the way I'm living out here in California, because it's different from the East Coast, because pretty much majority of my friends, they're from the East Coast, and I'm in California, so I'm 3 hours behind. And usually, when it's time for me to socialize or see what's going on, I mean, even though I'm connected, it's by the time it's 7 o'clock here, they're already getting ready for bed. So it's just a whole another world. But getting back to this, pretty much I look at the all. Pretty much that's my cumulative GPA from the beginning, from when I first started investing till today. So pretty much I started on this is year 2 for me, and then pretty much today I'm at 5.83%. So I'm up $333. As you can see, my portfolio, I'm at 6K. I have 79 assets under management. Here are plus these 2 cryptos, but those are more my speculative. So I got a third speculative, but it's a stock. So pretty much these 2 are speculative but currency, and they're like speculative off the Richter scale. So I pretty much don't even, there's just something where I just hold it forever, and pretty much watch how it functions. I invested like $6. So I'm not going crazy with the crypto. You know how people are selling their houses and buying Bitcoin. No, I'm not on that wave. I'm just pretty much buying and holding just to get the feel of. So when I do feel ready, I'll be able to go more in. But I won't spend more than if I'm really feeling something in the crypto. I won't spend more than 50. But I think even $50 right now in crypto is just too for me. It's just I'd rather put that in a stock. So pretty much I have 79 assets under management, starting with Google, and I'm working my way down. I'll break these down, these 79 assets, in an app called Tradebase. So as you can see, and it ranges all the way down from 1,000 all the way to $1. So that's pretty much my range of investment. So I haven't been out of that thousand mark yet. So pretty much I'm buying companies from $1 to 1,000. So that's pretty much where I'm comfortable investing. And this is pretty much my second year to get to that. You know, you kind of build your confidence up like how you build muscle in the gym. Same concept with investing that I've learned. Pretty much I have one speculative stock in my portfolio in my stocks, and it's Neo. But as you can see, fairly new. I'm up 34.61%. So I bought it at $7.30, and now it's at $9.84. So it pretty much this is the high it's ever been. As you can see, it opened up. Let me go up a little higher. It opened up at $9.90. So I'm pretty much back at its peak again. So as you can see, it's back up at the peak, like when it first opened up. So that's my speculative stock that I have, the only one I have in my portfolio. Everything else is pretty solid companies. But that's one where, since it's fairly new, there's not much data on it. They're a new company. I just pretty much, I had to throw a speculative in there and get the feel of what it feels, instead of, you know, how they're speculative of the lottery tickets and going that route. But pretty much, at least, you know, I can see my $7.30, you know, instead of me buying lottery tickets, I put it into this electric company, kind of electric car company in China, pretty much competitors of Tesla. So that is my 74 assets under management. My strategy for 2019 is 60% stocks, which I split the 60 in half, which I break into 30-30 into two categories. The first category is fast growth valuation with no dividends. Those are your companies like Google, Amazon, and what else? Google, Amazon, Netflix. That the fast growth valuation with no dividends, and those as you can by the names, they're tech. And then slow growth valuation with dividends, that's the other 30% of the 60. I like companies, those more are companies like your McDonald's, 3M, Lockheed Martin, Procter and Gamble. So that covers the 60% stock. So that's what my strategy for 2019 is: 60% stocks, those two categories, split it 30-30, and then 30% in index funds. Pretty much the three top index funds that I'm investing in are iShares, SPDR, S&P, and then Vanguard. So pretty much that 30%, I either whatever stock, whatever index fund that I see at the time is worth the 30%, I'll go invest it all in it. Or if I see each iShares, SPDR, S&P, and Vanguard, if I can get something that's I like in all three, I'll split that 30% into 10%. So 10% in iShares, 10% in SPDR, SP, and then 10% in Vanguard. And then I'll have 5% bonds ETF, and then 5% REITs. So that's pretty much my strategy for 2019. Pretty much I um, borrowed um, a concept from the International Monetary Fund, which they have their currency called the special drawing rights. So that's pretty much where I found this concept through the IMF. So if you guys want more information on that, I did a video on that. So check it out. Very interesting. Very interesting. That'll blow your mind, and it'll show you how the one world government's already in place. The IMF is pretty much the one world currency of the world, and they back up the five largest the economies in the world, and that's why I invest more heavily now into the market and the globe. What is it? You have the U.S., you have the euro. Now they just added the Chinese, so the Chinese is new. Then you have the Japanese, and then last but not least is the pound from England. So those five countries, you buying stock in corporations from those countries, good to go, because they got a system in place where if they need cash or if they're in debt, they can borrow their reserves from the IMF that they have, or borrow from other countries, because those five countries, they're all pretty much tied in with each other. So that's just something that I kind of blew my mind. So I took their concept and I'm pretty much running with it for this year. So I mean 2020 is gonna be on fire for me, if this strategy is what I think it is. So, and I'll let you guys know daily on this strategy. So let me show you guys the way I'm able to have a peace of mind where people are commenting like that's, they're like, wow, you got so many, but it's so simple. Pretty much I invest, you know how a lot of YouTubers, they invest in companies. They'll find one company and they'll just keep buying shares in the same company. Well, what I do is I buy companies in sectors. So say, if they're in a tech, if there's a company that they like Facebook, and they keep putting shares into it, I like the whole technology sector. So I'm gonna buy Facebook. I'm gonna buy one share of Amazon, one share of Nvidia, one share of VMware, Salesforce, anything in that tech sector. I'm buying one share of that to pretty much be equivalent and cover my whole spectrum in the tech sector. And then once I fill up the tech sector with the foundation of the companies that I have one share in, then I'll start looking at doubling up. But I think with that strategy, I'm gonna start playing once I get probably 500 the first 500 companies. I'm gonna start playing chess, not chess like literally, but pretty much the way I'll pick out, like, you have your king, your queen, your rooks, your knights. Pretty much those companies will start representing like those type of key. I'll start doubling, tripling up in those type companies that I feel like, okay, this is the king, so I'm gonna invest in this company like I would play the king. The queen, I'm gonna invest in this company like I would the queen. I mean, the queen is gonna be brutal, because how in the game of chess, she can move all around. The king, is well protected and only can move one, but it's the most important piece on the game board. So I'm pretty much, and that's going to be for 2020. So it's just other concepts that I'm pretty much that I'm finding and I'm pretty much using, and it's pretty much a game that I'm pretty much inventing for myself to make this fun. Even in a bad market, I know I've seen a lot of people pretty much that's holding a lot of the Kraft Heinz stock. I mean, they're like all sad, but I mean, I don't understand, because their philosophy, they're all saying, oh, if pretty much, if the stock market goes down, you should buy. It's, no fret. But when they're holding something and it does go down, in my mind, I even left a comment. I'm like, why don't you buy more? Okay, if you believe in that company so much, this is just one bad news. I mean, why, if you believe in it, if you see the history of it, it's um, Kraft, Kraft Foods and Heinz put together, and then they were about to buy Unilever. I mean, it's just something going on with the books, whatever. But since we're so low on the totem pole, I just was to myself. I was like, man, why are they bugging out? I went and bought me a share. Everybody while they was running from the hills, I had some reserve capital, so I went and bought me a share right here. I bought it at $35. I mean, cool. It's at 33 now, but I believe in it long term. It's been around since like 18. I mean, they did a what's it called? God, why my mind just not with me today? When two companies come together, I don't know why the word is not, it's not clicking with me. Wow. But basically, Kraft and Heinz, they pretty much they came to get they not combined. Basically, they came together. I don't know why my brain is not functioning. It's not the word is not pretty much popping up in my head. But two big companies came together, in 2015, and pretty much, as you can see, I bought on February 25th, the day everybody was bugging out. So I was like, shit, I might as well. I mean, if you look at it, it peaked on February 17, 2017 at $96.65, and then if it's free falling like that, I mean, I had to buy one, to add to my pretty much my portfolio. So that was one, and I even put out a video on it, just expressing myself, like, these YouTubers that are, long time investors, yeah, you can't get emotional to this, and that's why I just, as you can see, I'm just one share, pretty much building up the foundation first before I build the house. People are just like, they'll pick a stock, Starbucks, yeah, boom, this is my house. I'm like, shit, they just go too much, they rely too much on like mainstream media. So I'm trying to build it from scratch, like brick by brick. So that's why you see the ones, if you see the twos, that's pretty much when I first started. I had that same concept, but in the beginning, I was like, okay, let me buy companies that I believe in, like Nike, and Sony, and then Coca-Cola. Those were the three that I was like, okay, I could see pretty much what got me into the investing, what built up my courage to finally invest was I saw that Blade Runner 2049. I don't know if it was 2040, the newest Blade Runner, and basically I saw on there they had like advertisements of Coca-Cola on there. So I was like, you know what, if I just if I buy it now and pass this on to my kids, they're gonna reap the benefits. And to me, I just get pleasure out of it, because I could see myself, not even in the future they're gonna be prosperous, because I've planted the seed now, instead of just like, oh no, I don't know, I'm gonna wait, and everybody's going, just getting too attached to their companies. I'm not getting attached to them. No, I'm playing the game differently. And that's the more I started to become detached and started to treat it like a game, I started to become more open-minded and started to develop more strategies and more concepts to add into pretty much my investing style, to make it fun. Just like how, you hear these day traders and swing traders, yeah, I made $500. I mean, they're playing the risky game. Yeah, they're young and all that, but that's too much stress, and then and then that money, you don't hear them saying, oh yeah, I'm taking that $500 and I'm reinvesting it back into the market. They're like, no, they're taking their profits and they're pretty much spending it on their living expenses. So I mean, their strategy, I just, it's all about the market. It's all about playing the compound interest game. So and that's what I discovered, the eighth wonder of the world. Okay, so I'm gonna show you guys my Tradebase. So you can download. Let me go back. you can download this app called Tradebase. So pretty much, this first page right here, this is pretty much for swing traders, day traders. I don't do none of that, so pretty much you don't see anything on here. It has me down for 84 trades. That's probably 84 pretty much trades that I made with Robinhood. So as you can see, so I got my profile, then holdings. Now this is interesting. As you can see, the positions I have 79 assets under management. So those assets are like stocks, bonds, REITs, index funds. So those are all positions. But I just say I try to keep it professional and try to just keep it try to detach, not attach to it. As you can see, my market value on $5,683.25. My total is 4.97%. Today I'm up 0.03, so that'll put me at pretty much 5%. 5% from now. Ask these other YouTubers to look at what they're bringing in total. They'll skip over it, just because they'll skip over it because they're not playing that game. They're playing I want to invest in Facebook. I want to invest in all these other companies, and they have no idea what they're doing. I mean, this is supposed to be fun. Like, do your research, and people are not doing it. So and I'm gonna start exposing, because it's like, why are you gonna be on YouTube, just to be on here for shits and giggles and try to make a quick buck? But really, it's about passing this knowledge on to the next, and that's what I'm all about. I'm serious about this. It's a game. It's serious in that aspect to learn, but at the end of the day, it's a game, and people will take it, if you're gonna play it to the maximus. So, and that's what I'm doing. So, and then I'm just pretty much reinventing the game. Like people like talk about Warren Buffett. His era is done. That's old school. Like where he came from, we're not in that era anymore. They didn't have tech. Look at him now, like, oh shit, this tech, the Apple, I bet that was hard for him to do. We grew up with it, I know I did. I grew up in the 80s and 90s. So it's the time for the next to step up, to make it fun. So, and then plus they have this platform, Robinhood, to make it fun, and we don't have to pay commission. And they have the high frequency fees or whatever. I mean, I'm not concerned about all that. It's just a whole different game that we are in right as of now. So the position I hold is 79 today, advancing. So pretty much I got 41 out of 79 that are up for today. 34 out of the 79 are down total. Advancing 43 out of the 79, and declining is 36 out of the 79. So you can pretty much check yourself out on that. And then distribution. This is interesting. Okay, you have position, sector, and cap. First, I'm going to start out with position. So Google out of my portfolio is 20%. As you can see, it shows the percentage and the amount. Second is Netflix with 6%. Third is Lockheed Martin at 5%. Fourth is 3M, 4%. Berkshire Hathaway, Class B, is another 4%. And then, last but not least, other is pretty much, and those are the plus 74 is 61%. So, as you can see, that those 74 covers 61% of my portfolio. Now, this is interesting sector. Now, technologies pretty much covers majority of my portfolio, which is 33%. Consumer goods covers 17% of my portfolio. Services covers 17% of my portfolio. Industrial goods covers 14% of my portfolio. Financials, 9%. And then others, 6%. So, interesting. Now let's go to the market cap. As you can see, large, 10 billion to 200 billion is considered large. That's pretty much half of my portfolio. So I'm invested in large, 50%. Mega is 200 billion plus, and that covers 43% of almost half, the other half of my portfolio. And it goes down to mid, which is between 2 billion and 10 billion. That covers 4% of my portfolio. Micro, which is 50 million to 300 million, which is 1%. And then small is 300 mil to 200 bill, which is another 1%. And then nano is a 0.01%, and that's under 50 mil. So there you have it, the distribution. It breaks it down in those 3 categories: position, sector, market cap. So I mean, and this is how I'm doing it. 79. Okay, now here, this is interesting. Now I'll show you all the open positions that I have, all 79. I can either look at it from this point of view, or I can look at it from this point of view. I'm going to go from this point of view because this one is more detailed. But I'll go into that once I get more advanced. I'm pretty much... well, you know what? Let me go into this one. So pretty much Google, the breakdown. As you can see, shares, value, average price, trade, today, total. So it breaks it down. Yeah, I'll go over the percentage too. Google, up 0.59%. Well, there's too many, so I'm just gonna run through the names. If I see something higher than 10%, I'll call up the percentage. Next is Netflix. Netflix up 30%. So they're rocking. So I got Netflix, Lockheed Martin, 3M, Berkshire Hathaway, Class B, McDonald's, Apple, Nike up 30%, Facebook up 20%, Baidu, Nvidia, Visa up 24%, Johnson & Johnson, United Technologies up 20%, Disney, Microsoft, Procter & Gamble, Waste Management, Walmart, Sony, Coca-Cola, Anheuser-Busch, Starbucks. This is a index fund. It's the SPDR and S&P Global Dividend ETF. Here's another index fund. It's the iShares Core MSCI EAFE ETF. California Water up 23%. International Paper, General Mills, Pfizer, British Petroleum, Archer Daniels Midland, Hormel, an index fund, Vanguard FTSE Developed Markets ETF, HSBC, Taiwan Semiconductor Manufacturing, British American Tobacco, American Airlines, negative 29%, ouch. KBC Group, Kraft Foods, the legendary that everybody's running from the hills from, Aramark, AT&T, Bank of America, index fund SPDR, Bloomberg, Barclays short term, that's a bond ETF, IQIYI, wow, they're up 48%. So this is the highest that I've seen. JD.com. No, let me take that back. AMD is rocking right now. They're up 142%. So they pretty much they got the cake right now. Is AMD. If you guys are watching this, check out AMD right now. Starwood Property Trust, that's a REIT. Manchester United. That's the international football club from England. So you can purchase your own. If there's any sports fanatic, I know I am. I grew up with sports, and you know, when I saw this, I was like, I just had to buy it. Even though I'm more of a Barcelona fan because of my son, just to have a share, just to say, oh yeah, I own a piece of Manchester United International Soccer Club. So AGNC Investment, Apple Hospitality REIT, Green Plains. Oh, they pay a beautiful dividend, and they're up 17%. Check out Green Plains. Industrial and Commercial Bank of China. Oh, let me go back. Okay. Sprint, Credit Suisse, Gladstone Investment, GameStop, GE, Ultralife. This is my speculative stock, NEO, up 36%. Wow. Densaki Bank, Deutsche Bank, Barclays, Aurora Cannabis up 28%. Commerce Bank, Royal Bank of Scotland, BlackRock Capital Investment, that's the index, AK Steel, Nokia, one of the 5K players, Sirius XM, Chesapeake Energy, Daiwa Securities Group, out of Japan, Cemex, Cement Company, Santander Group, out of Spain, banking out of Spain, Dunberry, Aerotech, Mitsuho Financial Group out of Japan, Nordic American Tankers, Norvavix, up 41%, and then Sunworks. So there you have it. Pretty much that's my 79 positions and how you're able to hold more than 50 companies. If you're feeling stressed out, download Tradebase, and pretty much I'll see you guys in the next one. Peace.